All right. Welcome back, guys. So, like I said, today is day six. Today is day six of the 7 days ICC course. So we're just gonna be, doing some of the what is this? Live chart analysis. We're gonna be applying ICC structure and price action in real time, and the things that we're gonna cover is the live charts, obviously, identifying structure shifts and possible entries, and then how to plan for entries or future moves based on the structure that the market is showing, right? And obviously, some of the things that the mistakes that we traders make, just to put it in theory or into action with live examples. You understand? So I'm also, I think, gonna do some of the things, time frame breakdown, and then marking of your chart, and then we have that live analysis, right? So yeah. So we can then jump on into, let's start with gold, right? Let's even start with okay, let's do live chart analysis, right? So we do have this on gold, right? For 4 hours on gold, yeah. We have this on 4 hours on gold, right? So gold has been bullish for quite a period of time. And then we had it making equal highs and then breaking the higher lows to give us a lower low and then a lower high and then a higher low, right? And then this was a shift in market structure, It actually shows well in 1 hour. So lower low, lower high, and then a higher low, right? This was a shift in market structure to show that price might actually go above this, right? So with that being said, we had gold moving to the upside, right? So we had to mark off this and say, okay, we needed indication to the upside for us to be to take buys, right? Because we had this higher low, which was created also here, right? So we needed to break the lower highs so we can see that the market is starting to get bullish, right? So when you go down to 15 minutes, when you go down to 15 minutes, obviously the level that would have actually mattered the most, let me just mark this off, is where the market broke off everything, right? So that would have been that in terms of, the overall movement, because we had that break to the downside, which became the indication overall the first time. Obviously, we had those equal highs at the top there, right? We had those equal highs at the top. And remember, we can't have two indications. We only have one indications or one breakout and the retest, which would be the correction in ICC. And then we need a continuation to go to the downside, right? But then Price didn't do all that. But instead, what Price did, Price then decided to go to the upside, right? Then broke above and give us another indication. So this now becomes invalid. All of this indication to the downside, where Price broke the higher lows, which were sitting here. This higher lows, this 4 hour higher lows or 1 hour higher lows, Price broke it and created a higher lower low and a lower high, but then price didn't continue to go to the downside, started to give us a higher low, and then give us to the upside. So remember, I did speak about what is this ICC also happening on smaller time frames. So that was what was happening to the build up to the upside, right? That is the kind of structure that we see here. So we that would overall that did happen, and then now we have an indication on the upside. We had an indication on the upside, but there was also opportunities to be able to capitalize off of that. We did discuss it earlier on the Zoom, but I didn't record it. Those who are not available on the Zoom, unfortunately, you missed that out. But we did have that how you could have taken a trade based off the smaller time frames and how to capitalize all of that, right? So people are saying most of them they say they're struggling with marking off their chart. Here's my thing, eh? When you're marking off your chart, look for any like swing points which were broken. Like for instance, you have a high, you have a higher high, you have a higher low, right? This was broken where price disrespected price and go went to the downside, right? With that being said, you mark off this area because now it becomes an area of interest, right? this area because that's where the initial indication came from, right? And then price said gave you a lower high, but then you know that all of this movement going here based on how ICC is explained, should be a correction before the chart decides to go to the downside, right? But what most people don't realize is that also within this trend, there is another trend unfolding, or there is another kind of setups unfolding on this trend, right? But I always say this: if you are in a downtrend, you need to see the lower lows, lower highs, lower lows, lower highs, right? The moment the chart starts to give you a lower low, and then a lower high, then a higher low, then a higher high, then it's the whole different trend now. It becomes a whole different trend, right? This is price action, how price action has been explained, right? This is how we know that, okay, but the chart giving you a higher low after, instead of giving you a lower low, doesn't necessarily make it bullish, because the chart, as much as it gave you a higher low, it can still come back to here and then shoot to the downside, right? So we need to have a few confirmation to the upside, or to the other side, where it confirms that now the chart is now bullish. So we can start looking for bullish setups, right? So it will obviously break above this level. You mark off this level. Also, it's like I need to see market breaking above this level to give me a high. So now this acts as an indication also on whatever time frame this is unfolding on. Now price would correct obviously back, and I did speak about how I prefer it correcting. I prefer it correcting back into the previous highs, or in this case, if it was on a downtrend, I prefer it correcting back into the previous lows, because it is much easier for you to be able to take those trades, because anything below this would be sales, because that's where the indication came off and the correction went there, right? So I would prefer it to actually correct back into this, and then I must start looking for buying opportunities on the upside, right? So some of the things also I did realize is that while this is happening, it's unfolding, there is a trend also on a smaller time frame, the likes of 15 minutes. So how do you also capitalize of that? And I did speak about correlation, the importance of correlating smaller time frames with bigger time frames, based on how you trading, your trading style. But if you're gonna focus on scalping, if you watched the video yesterday, I did show possibilities on how you can scalp using ICC. Is the same way. You understand? Because I've realized some people want to trade every 2 minutes, but that's not possible. You need to let these things unfold. But when you can correlate all of this with the higher time frame, it becomes much easier for you to be able to, capitalize based off what the higher time frame is showing, right? So now in this instance, gold then decided to show us a break above these equal highs, which were done here, right? It firstly reacted off of that and then broke above, right? This is on a 4 hour. It broke above. So now on a 1 hour, you realize that, oh, I have an indication. So that means if you're trading based on bigger time frames, you would then have to wait for the correction, for price to correct back before you can start looking for, taking those buys to the upside. Preferably, I would like it to correct back into the previous highs, and then so we can start looking take opportunity to the upside, because everything above the highs where the indication came from, it will be bullish, right? So it will be bullish. So that's something that we can be looking forward to. But then when you break it down, when you go down to smaller time frames, like let me just delete this. Let me just delete this. Yeah. If you go to smaller time frames, like the likes of 15 minutes, you realize, oh, on 15 minutes, the chart actually gave that indication, came back, retest those highs. So how could have I capitalized going to the upside? Because now I see that the chart is also giving me a trend, right? We're having those higher highs, higher lows, equal highs, higher lows, lower high, higher lows, higher high, higher lows, higher high, higher lows. They break above higher high and a higher low. So now we are in an uptrend. It's still the same thing. It's still ICC, still price action, it's still mega structure. How do you capitalize based off that trade, right? You can then move down to smaller time frames, like 5 minutes. Like, oh, what do I see happening on 5 minutes? I see price went up, created this high, came down, right? But then this is above those highs, right? And this trend of higher highs and higher lows that is you see that led to this breakout it is showing you that you are in an uptrend on a small time frame. But you can capitalize of this because now the the previous highs were then being broken. So now you get to trade, but then this also is on a small time frame. Some would say you trade in the indication. No, you don't trade the indication. You're trading what the market is showing, the market structure, because it's still ICC at the end of the day. Get what I'm saying? So you had the break above, and I always talk about the entry style that we're using. We had this market broke above the level of support, the level of resistance, and then retested to give you a higher low. So it should continue the trend. As long as it's not changing the trend, it's continue the trend, right? Because if once you have a change of structure or if the lows would have came and broke these lows, then it invalidates your entry level. So you couldn't have entered, you took a trade from that level, right? So with that being said, this would have been like you mark off this chart to say, okay, this high is above this previous higher highs on a bigger time frame. That means the chart is trying to give us that indication on a higher time frame that is bullish, right? But then how do I capitalize off of this move going to the upside, right? You want to see it create a higher low so you can continue the trend that it was busy with. You want to see it create a higher low. Then you would have probably capitalized on like here, just here at the top, you're like, oh, once the higher low has been created, your stop loss just below it. And then if you're gonna go for that, whatever, I prefer 1:3. 1:3 is just about here. And as you can see, this is the trade, right? But I missed this one because it was early in the morning for me, right? I missed this one. So how could I have capitalized knowing that the market is this is what the market is showing, right? I then went down to 1 minute where I then decided to like, okay, let me see what the 1 minute is showing me, right? And look for areas where price has been reacting off of, right? So with that being said, price react has been, coming down, it's been reacting off of this level, right? Came, give us lower lows, react off this level, like, oh, what is currently happening? Let me just mark off this area because that's where price has been reacting off of, right? As you can see, price has been giving those reactions and all those kind of things on that level, right? So when price, when even if you were to use the weeks or whatever the case may be, right? Price then, if you can see here, let me just zoom this in. Price decided to break above, right? It broke above, but you needed that higher low to happen, right? So you would have marked this and then waited for the chart to come back so you can enter based off that the high that was created, right? You would have waited for that to be triggered. But then, as you can see, the chart didn't really open the trade, right? It was just underneath, but didn't open. So it went down to create a lower low, then it invalidates the entry. So you leave it alone, right? You wait for a chart to build some kind of momentum. And as you can see, there's also another structure. There's also a trend happening because if a chart is doing lows, lower highs, lower lows, lower highs, lower lows, it should continue to do that. But that's not what it's doing. And it just touched on this where the resistance was sitting on that bigger time frame lower what higher highs, right? So now it broke structure here, creating a higher low, right? A higher high, a higher low, a higher high above that level where price bought the first time. You get what I'm saying? So now you're like, oh, because this acted as an indication also that and price was coming back to retest and to correct price. And now you see a shift in market structure because now when price was coming to correct, it was making lower lows and lower highs, lower lows, low. That's still a trend. Overall, it's a trend, right? So a shift in market structure needs to be followed up to have an uptrend. It needs to be followed up. So it needs that higher highs, higher lows, higher highs, higher lows. So with that being done, shift break of structure happened at this area, higher high, higher low, higher high, higher low, higher high above that level that the indication on a small time frame came off. You understand? You're like, oh, let me just mark off this top, right? Let me just mark off this top, and I need price to give me a higher low before I can enter to the upside. Price gave you these three candlesticks and created the higher low, and then when price came, you could have easily capitalized off of that. Stop loss was just I think 4 points, and then as you can see, ladies and gentlemen, 1:3 on this was gonna be here, round about here, right? So then you can go back to 5 minutes and select, oh, I wanna I wanna see, Yeah, by 1:3. And as you can see, your 1:3 was definitely hit. Get what I'm saying? So this is how you can combine the smaller time frames in terms of price action trading and or ICC in this case, because I need you guys to understand ICC is not a strategy. ICC is like a process. You have price going down, giving a lower high, and then breaking this previous lower low and then a lower high, right? So for you to be able to capitalize off of this, as you can see, this is now a downtrend. How do you capitalize off of this? Sai created the process. It was like, oh, price is giving me is indicating that it can sell below this. So this retest that was going to happen, whether it's going to retest up till here or into the lows, whatever the case may be, then price is correcting. It's still a correction. Price is correcting itself because that's what price will always do. It will always go back to correct, whether it opened the gap or whatever the case may be. It will one way or the other. It will go back to correct price, right? So we had that happening on that time frame where price went back to correct, right? So with that being said, price then decides to come back because now, if you are in a downtrend, you need to have lower lows, lower highs, lower lows, lower highs. So based on the indication which came to give you a lower low, you then enter based off that below that. But what you should know that the movement that's going to happen here, the movement that's going to happen here for you to be able to enter in needs to be in correlation with the overall time frame. You get what I'm saying? In this case, you need to have what's going to happen here as lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, whether on a 5 minute or whatever the time frame might be. So this level of support would be something like this. You need those break belows, and then you can capitalize off of those levels. If you mark them off like this, like, oh, I have a lower low below this level where the indication came off out of. You understand? I need a lower high. I don't need a higher high. I don't, once the chart does it invalidates the entry. You need to wait for another lower low. Now below this one that was created because that one price ended up breaking, the lower highs. So it ended up breaking the trend. So you need to wait for it to break this a lower low and give you a lower high, right? So you can capitalize off of now this one here. So obviously you would then put another level, say I needed to break this lower low because this lower low seems like there's buyers which are sitting at this level, which push the market to go to the upside and then break the lower highs. So this was a break of structure because now you have a lower low and a higher high. So you need a lower low before you can enter based off that movement on the downside, right? So once you then capitalize, you wait for price. Once price gives you a lower low, it needs to give you a lower highs to show that it's bearish. It needs to give you a lower high so that you can then be able to confidently take a trade based off the lower low that was created and then aim for whatever 1:3, 1:4, the case may be. You understand? Or even the swing point. You get what I'm saying? But it's not always as how it is made out to be. As I was saying earlier, the best way to go about these things, aim for realistic risk to reward ratio. 1:1, 1:2, 1:3, whatever the case may be. If it goes on, if you like to trail stop, then trail stop, if the case may be. But if it goes on and on, then fine, move your stop loss based on the structure that because if it's in a trend, it will always continue. The whole move to the downside would then include the trend. Whether on a 1 minute, 5 minute, the trend will be there. There will be a lower low, lower high, lower low, lower high, lower low. It will be a trend. It will be that's just what's gonna happen until it hits or wherever that you wanna the indication and then start to break the lower highs and build that correction to the upside again before it can continue again going to the downside. It's just simple as that. You understand? So these are some of the things that you need to take note when it comes to trading. ICC, which is just price action. This here, this indication on the ICC is the breakout. This a correction is the retest. Price is retesting. But then this would definitely, obviously, the trend, you most likely, if you're going to be day trading, you most likely to find it on the 4 hour or the 1 hour, right? This is what's going to happen. But this, you're going to find it on 15 minute, 5 minute, or 1 minute. This is what's going to happen. But I highly recommend that if you're trading based off the higher time frame, just stick to 15 minute and 1 minute. But if you're gonna be taking the if you're gonna be taking the scalping, based on the trend that's gonna be happening on a 15 minute, then you can capitalize off the 15 minute. Then that's when you can include M1 minute time frame. So you can capitalize off of the scalping session, whatever session that you will be in. So you can scalp based on what you see, as long as it's in correlation with the 15 minute where the trend will be. As long as there's a trend on the 15 minute, then 5 minute and 1 minute, that's where you'll be able to get those entries. So you can capitalize off of them. So that's how you can be able to do all of this. So you can see 1 to 3, but realistically, so it hit. You get what I'm saying? It's everywhere, guys. Like let me just read everything. It's in whatever time frame that you can think of, right? Like for instance, you had the chart obviously breaking this higher highs that was created here, right? Price gave you an indication that anything above here, price would be bullish. Now you wanna go down to M1, so you can look for entries to the upside, right? You're gonna look for entries to the upside. Probably your take profit will be here if you're gonna be doing a 1:1. Price came back to correct. Anything above this would be bullish, right? Price giving indication. Price comes to correct, which is a retest, right? Breaks above, gives you a higher high, a higher low. Now this is where it gets interesting because now you have a higher high, you have a higher low. If you could have taken a trade here, this is how it would look like. That's a good 1:1. You get what I'm saying? Probably if this was higher, but this is how you can capitalize all of that. But then price came back after creating equal highs, it came back to correct. But then still, when you go to 15 minutes, this was probably the higher low that was needed in 15 minutes when price came to give that 15 minute when it came to correct price within this 15-minute high that I just showed you. So this was an indication on the upside. This was the high indication on the upside. Price came back to correct and then exited, right? So now we go back to 1 minute again, just to show you this is the entry model that I talk about. Break above, and then they read the higher low that was created in 1 minute. But then that higher low made a wick. That wick, you don't use the higher low wick. You don't use the higher high wick. You use the one that is higher between the higher low and the higher high. You use that one. You understand? You can capitalize off of that one. And then if you look at this currently, what's currently happening, the chart gave you a higher low, and then the stop loss is just gonna be here, 3 points stop loss, and then already you would have hit your 1:1. And if you are aiming to 1:3, probably chances are the chart will go there because you already know that you are in an uptrend. So that's how you can capitalize off of whatever trend you are in terms of as long as it's in correlation with what's happening on the bigger time frame. Because already on the bigger time frame, this acts as a all of this movement on a bigger time frame act as an indication when you go back to 15 minutes. It acts as an indication above those previous highs, which were equal highs after price gave us an indication, right? So that's how everything now. Let me see. Yeah, all of this is happening above. Let me go to 1 hour. Yeah, all of this is happening above these, which acts as an indication. So you see how easy you can take those entries to the upside without even having a massive stop loss. You get what I'm saying? So, or waiting for way too long to take this trade. But you need to study these things. You need to understand them. You don't need to jump into them like some people will do. Though you don't need to jump off of into them. You need to really know price action structure. It unfolds on every time frame. It unfolds. So if you're using 4 hour structure, you will need 1 hour, 30 minutes, and 15 minutes for entries. If you're using 15-minute structure, go to 5 minutes and 1 minute for those entries. That's where the entries will come out of. You get what I'm saying? But it's the same thing all over. It's the same thing all over and over and over and over again. All right. We have about 10 we have about 7 minutes left. If somebody has a question, I can easily quickly address the question. Anyone?
All right. Yes, yes. Just morning, everybody. Well, for me, it's morning. I know for you guys, it may be afternoon, right? The I just want to make sure that we all understand something because you talk about price bouncing off a certain area before you determine where you draw that line to see whether or not there's an indication. And I just want to be absolutely clear where that is concerned. And hopefully it might help some others as well. Are we saying that the area we mark out is the area that where a market shift takes place or a break of structure takes place? That's where we begin the marking out from. For example, here on the chart before me and before us, you have price bouncing off that line. But in essence, as you go all the way across, it would have given you a breakup structure. Am I right?
Yes, yes.
So is it that we're looking out for the breakup structure points or the market shift points to draw that line to determine whether or not we have an ICC structure coming up?
Yeah. So basically, in most cases, if I can put it in maybe in demonstration, right? It will look something like this, right? So we had chart going up, giving us a higher high, a higher low, equal highs, a lower low, right? Then this acted as an indication to the downside. So price started to go up on a higher time frame, but it then didn't give us a lower high that we were hoping for, so we can take the chart to the downside. So we can sell price below this indication, right? So that was when you were trading based on the bigger time frame, which was going to be 1 hour and 4 hour based off that movement. But instead, chart continued to go to the upside, whichever then ended up breaking the the equal highs which were created at the top. So it looked something like this. But then when you break it down, especially this session here, when you break it down to look for entries, because now once price breaks above, you know that, oh, this is an indication, right? Price is giving me an indication. So if you're looking at it from a 1 hour perspective, obviously you can't take an entry because there's nothing that you can see here, right? There's nothing that you can see except that price broke above, right? So you're gonna wait for price to correct back before you can be able to take the entries. But what I'm saying is that from here, when you look at a small time frame, now going to 15 minutes, now price broke above this level, retested, gave us a higher high, right? Give us a higher high. And then what price did is it came back, retest the very same level so it can continue to go to the upside, right? It's building this structure to the upside. Is building, an uptrend going to the upside. Even before it broke to the upside, it was still building structure, higher highs, higher lows, going up, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It broke above, came back, retest, something like this. You get what I'm saying? So that's how I'm saying you can capitalize because it's still the same thing also. Because the same indication that you're seeing happening here, because now this would look something like this, which would say, oh, now we have a break of structure here happening. We have a break of structure happening here. We had a break of structure. So we need price, which now acts as an indication, break of structure or indication. Let me just say indication, right? So you need price to correct back on a bigger time frame, right? You need price to correct back on a bigger time frame, on a 1 hour. Wherever the indication might end up, you need it to come and correct back, which will be the correction or the retest. And then so you can start taking those moves to the upside because the indication came out of this, right? But now, on this movement as a whole, this year, you have this happening. So about that. Uh, yeah, we left with 5 minutes, guys. So you have this happening. You have this happening. Now this is on a 5 minute, 15 minute and 5 minute happening. The break above that level of support where price broke a level of resistance, actually broke the highs, these highs. It broke above in 15 minutes, came to retest, you understand? So how you could have entered based off that, because now you see a structure is backed up by the structure that was coming up, which was higher highs and higher lows, higher highs, higher lows, immediately. You get what I'm saying? So the indication actually which came, it also has its own structure, and that structure is not breaking. You get what I'm saying? So let me show it to you. So we have these highs where the indication was off. You get what I'm saying? So now this is on the 1 hour. Now when you go to 15 minutes, this is what you see on 15 minutes. Price what did what? It broke above that, gave you a higher high, came back to touch this level of resistance, which now became a level of support. And you already know that this here we have buyers because price is pushing up. Buyers are involved. And what this rejection also proves that buyers are involved in this move now. And we already have a structure. If you go to 5 minutes, it will see it even much clearer. You already have the structure happening. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, break above with the higher high, created the higher low. You could have entered, like I said, the first one could have been here, there it was, right? Price came back to touch. That's when it came back on the 15 minutes to touch. But then you could have also waited for it to come and touch it like it did now, right? So you look for those level where price has been reacting off of, right? Then that's when you could have went to 1 minute, but it's still the same thing. What you're doing on a bigger time frame, you're still doing it on a smaller time frame. So you have this level where price did react off of. You had this level where price did react off of, right? And then you know that anything above this, because this was also a high, right? This was also a high, this was also a low. Same thing here. Same thing here. This was also a high, this was also low. High, higher, low. Get what I'm saying? This also acted as an indication to say price can buy above this level. It came back to correct price. It bought above this level. So now you have an indication above this level where price showed you it can buy above that level and it came back to correct price on this level, right? It didn't break below this, any of this. It didn't come back into the trend. But then what did it do? Once it was coming to correct, it then changed structure because now also going up, you have higher highs, higher lows, higher highs, higher lows, and then lower lows, lower highs, lower lows, lower highs, and then shift in structure, higher highs, higher lows, break above the level where it indicated that price can buy. It's the same thing. Even if this was going to happen on the 4 hour or the 1 hour, this is how you would have taken the trade, regardless. You want to have that break above, a retest with a higher low, not a lower low, a higher low so that we can capitalize and move based on that. So the moment you learn how to use it on a small time frame as the very same way you use it on bigger time frames, it's gonna be much easier for you to actually comprehend or actually execute this. Like I said, 1:3, or let's say 1:4, for those who like to be greedy a bit. You know, as you can see, there it was. But it's still ICC. That's what I'm trying to teach you guys. It's still market structure. It's still ICC. It's still price action. It's still market. Like that's how it is. Break of structure. Indication. Break of structure is indication, right? A retest is correction. Price is correct, right? Like for instance, let me see if I can see it on a 1 hour and then show you, right? Um, let's see. Honestly appear clearly on 1 minute, on 1 hour, right? I will make an example based off 1 hour, right? Okay. So practically what did happen on 1 hour, something like this, right? We had this equal highs here, right? We had this higher low, which was broken, where price gave us an indication to the downside that anything below here would be bearish, right? Anything below here would be bearish, right? So now, what did price do? Price ended up breaking, you see? Price end up breaking this highs, giving you a higher high. So now this is no longer valid because now price is breaking this high. It gave us a higher high. Now it needs to give us a higher low, right? So it's more the same thing that happened on that 15 minute, right? So you look for levels where you can capitalize off of so you can continue with the move because now the move is there where price has been bouncing off. And you will find those levels when you go down to smaller time frame because it's in correlation with whatever that is happening on a bigger time frame. Same thing, break above. That move is in correlation with whatever is happening on a bigger time frame. Yeah. But yeah, for those there's gonna be more of these. Those in the Hassan University, we only have 8 spots left. Someone just paid now. Yeah, we just only have 8 spots left. But this is price action, guys. I'll send probably a PDF so you can understand. Probably you can explain something. A price action PDF I did in 2019. So you can see the structure, the breakout and retest that you will see. So some will act as a reversal, which in most cases people say is continuation, but it's a reversal. But yeah, pretty much we have that. And then those in the university, we're gonna be having our call in the next 15 minutes. And then our analysis and all those kind of things are gonna be happening there. All right, and for everyone who attended, thank you very much. For those who wanna join, text me. I have my handle there in the Telegram group. And then remember there's one-on-one sessions where you're gonna whatever you're struggling with, I'm gonna be there every step of the way so you can get this right. The goal of the university is to help you so you can do this on your own, not the other way around. It's not a signals group. It's not a course. I'm not selling a course. I'm teaching you how to do this thing on your on
I
your
just
own.
wanna I just want to take the opportunity, though, Hustle, to congratulate you on the launch of the university and wish you success. I may
Thank,
not join you just now, but sometime in the future, I'm sure. But
thank you very much.
success to everyone, and we look forward to a continued success and that everyone will learn enough so that each of us can do what we have to do for ourselves and our families. So once again, congratulations to you and all those who are joining now. We wish you success.
Thank you very much. Thank you very much. Yeah, just to add on that, this is an investment on yourself, guys. It's not for me. This investment on yourself. It's not a signals group. So it's an investment on yourself. And then us, me and you, using our time to actually go through this one-on-one. You're gonna have 3 sessions a week, uh, where we just be me and you, me helping you with whatever you need. Every week, you're gonna have 3 sessions with me personally. And then obviously there's all gonna be also with the majority, the free group and everybody. And then it's gonna be those that we do within the university, with the group in the university. And many more things to come. Yeah, I'm still doing this alone. That's why 20 people. I don't want to go maximum. So yeah, once the spots are filled, yeah, if I think it's gonna be open sometime next month, but we'll see. Yeah. Thank you very much for attending, everyone. Thank you very much. Bye.